Hello everyone. Today onwards, I'm going to revise very important accounting lessons for this year, May Cambridge and Edexcel, especially for O-level or IGCSE exams. So today I'm going to concentrate about correction of errors, correction of errors, correction of accounting errors. As you know, the purpose of accounting is providing information, especially financial information to business stakeholders. We provide income statement with profit or loss, statement of financial position or balance sheet to identify financial position. Basically, if we provide incorrect information, the decisions of the stakeholders, it would be incorrect. So we have a responsibility to recognize, to identify and rectify or correct errors before we prepare financial statements. So we'll talk about how we recognize errors, how we rectify errors. Okay. Let me use a very important resource to explain this lesson. So that is a PowerPoint presentation. So as you know, we convert transactions to final accounts based on an accounting process. In accounting process, we can see business documents or source documents, then prime entry books, ledger, trial balance. So to rectify, when we are going to recognize errors, we use the last step, the trial balance to recognize errors. Based on trial balance, we will recognize two types of errors. I will explain those two types of errors in this video, right? So when we rectify errors, we can't use normal methods like tippets. We can't use erasers. We can't use normal methods to rectify errors. Basically, we rectify errors based on journal entries. So basically, when we rectify errors, we prepare a journal voucher, then we record in general journal or the journal, then we record in the particular accounts, then we prepare correct trial balance and correct final account. So anyway, so as you know, when we rectify errors, we use general journal. When we rectify errors, we use general journal entries. So I told about this introduction at the beginning of this lesson. As I told you, we have a responsibility to recognize and rectify errors before we prepare financial statements. So you should understand the situations where accounting errors take place. Basically, accounting errors happen in accounting process. There are 4 steps in accounting process. Those are, preparing errors can happen in the preparation of business documents, in the preparation of prime entry books, in the preparation of ledger accounts, and even in the preparation of trial balance also errors can happen. Basically, we prepare trial balance to check our accuracy, but in preparing trial balance also errors can occur. We'll talk about that error also. So then I'm going to categorize errors. Basically, we categorize errors based on the trial balance total. We check whether, or we think whether there is an impact to the total of the trial balance. So based on the trial balance total, we recognize 2 errors which affect the agreement of the trial balance, or errors which are basically errors which do not affect the agreement of trial balance, or errors which are not revealed by the trial balance. Second category is errors which are revealed by the trial balance. So we'll talk about these 2 types of errors. Basically, if you go through past papers even, you can see there are questions based on both the types of errors. Basically, under first category, errors which are not revealed by the trial balance, those are like smart lies. Very difficult to recognize these errors from the trial balance. That is one hand, a weakness of trial balance. So anyway, under the first category, or under errors which are not revealed by the trial balance, we have to think about 6 errors. We have to think about how many errors? 6 errors. The errors of omission, commission, original entry, principal, compensating, or finally complete reversal. So basically, under the first category, you have to understand about omission, commission, original entry, principal, compensating, complete reversal. Under these 6 errors, you should know the meaning of the error and you should know how to rectify the error. Errors of omission means the entire transaction has been completely omitted from the account. That means nothing has been entered about the transaction. So if there is an error of omission, we have to record it. Is when we rectify, we have to record like a fresh transaction. Example, sales invoice for $500 has been omitted. So we have to record like a fresh transaction. Sales invoice means credit sales. Trade receivable account has to be debited, then sales account has to be credited by $500. Like that, when there is an error of omission, we have to record like a fresh transaction. When we rectify, we record like a fresh transaction. Second error is errors of commission. That is recording the correct amount in a wrong account, but in the same class. Say payment of electricity expense for $500 has been recorded in telephonics. So recording the correct amount in a wrong account, but in the same class, so same category. So we eliminate from the wrong account and we record in the correct account. So the third error is errors of original entry. This error happens when you record specially transactions in the prime entry books for the first time. That means recording an incorrect amount in both accounts. Basically, this error can happen by either overstating or understating both accounts. So if both accounts are overstated, we take the gap and we record in opposite side. If both accounts are understated, we take the gap, we record in the same side. So that is errors of original entry. Right. So in this video, I'm going to revise all the important theories. So there will be another part of correction of errors lesson with past papers with important questions. So then the fourth error is children, errors of principle. Basically, this error happens due to lack of knowledge about accounting principles. But when you define, you can't tell like that. When you define errors of principle, you have to tell record in the correct amount in a wrong account and even in the wrong class. So basically, this error happens by either mixing. This error happens by mixing up, capital and revenue transactions. Say capital expenditure has been treated as a revenue expenditure, or vice versa. Capital receipt has been treated as a revenue receipt, or vice versa. So this error can happen in maximum 4 ways. So if revenue expenditure, say payment of building repair, say has been treated as a capital expenditure, say payment of building repair has been debited to building account. So credit the asset account, debit the expense account, like that. Basically, we eliminate from the wrong account and we record in the correct account. So then, say fifth error is errors of compensating or compensation. So 2 or more errors which have been set off by each other. So this happens by overstating or understating some accounts by the same amount. Say purchase account has been overstated by $200. Salary account has been understated by $200, like that. So then we, based on there are two, at least there are 2 errors. So we have to rectify both errors. So that is errors of compensation, 2 or more errors which have been set off by each other. So error number 5 is errors of complete reversal. Complete reversal means you record the correct amount in the correct account, but in the opposite side. So then when we rectify this error, we double the amount and we record in the correct side, right? So that is errors of complete reversal. Then the last error under the first category is errors. That is the last error actually, errors of complete reversal. I think you got a clear idea about these 6 errors. Errors of omission. The entire transaction has been completely omitted from the account. Errors of commission, recording the correct amount in a wrong account in the same class. Errors of original entry, recording an incorrect amount in both the ledger accounts. Then errors of principal, recording the correct amount in a wrong account and even in the wrong class. So errors of compensation, 2 or more errors which have been set off by each other. Then the last one is errors of complete reversals, recording the correct amount in the correct account but in the opposite side. When we rectify these errors, we don't want suspense account because these errors are not revealed by the trial balance, or due to these errors, there will be no difference in the trial balance. So when we rectify, we don't want the temporary account suspense. But due to some other errors like omission of one entry, recording two different amounts, recording the double entry in the same side, errors in balancing of the ledger account, or errors in the trial balance. Due to these errors, there will be a difference in the trial balance. That difference we transfer to a temporary account until errors are corrected. That is suspense. So when we define suspense account, you have to mention this as a temporary account, and it is used to record the difference of the trial balance and until errors are rectified. Once we have rectified all the errors, suspense account will not remain. That means the totals of the suspense account will be equal. So that is suspense. There are advantages of suspense account. Suspense account is helping to tally the trial balance. It helps to correct errors. Sometimes if the business is preparing the final accounts with errors, or if business has to prepare draft financial statements due to some reasons like tax payment, due to annual general meeting in near future. So due to those reasons, if the business is preparing draft financial statements, suspense account will help to prepare draft final accounts. But later, after finding the errors, you have to convert the result of the draft final accounts to revised final accounts. Example, actually in the Cambridge and Edexcel syllabus, that part is there. That is preparing statement of revised profit. That means the draft income statement or draft profit of the draft income statement. Draft means incorrect. So draft in profit, you have to convert to revised or corrected profit in a separate statement, that is statement of revised profit. So I'll talk about statement of revised profit with questions in the next video. Okay, if you have any questions or any doubts, you can put under comment. And if you learned something from this video, like the video, share the video with your friends, and I appreciate your comments about this video. Thank you very much. We'll meet from another lesson within a few days.